Do you want to retire on Tesla stock, or do you plan on holding onto your Tesla shares for a long time? Then this is the video for you. And today we're going to dive into some of the basics of Tesla investment, as well as 8 mistakes that you need to avoid if you want to make a lot of money from Tesla.
From the UAW strike, there has been talk and some reports of some workers at Tesla striking, at least in one country. But Tesla, Toyota, some of the others, I think they're working without unions. And, you know, Elon Musk does his best to sort of give stock options and actually raise wages so that the workers do feel appreciated. Is this something that you see as a potential real headwind, maybe even in 2024, where he might see a Tesla strike?
Look, I think American automakers in general have two headwinds. One, they've got rising labor costs, and two, they have a legacy 100-year built-out dealer network. Tesla doesn't have to worry about those things as much. They've got the most roboticized manufacturing lines in the world, and they don't have to worry about an external dealer network with conflicted interests. So you really have as a battle here between the Chinese makers like BYD and SAIC that will become household names that have a huge advantage with lower cost labor and lower cost batteries. And you've got Tesla that's been the global leader in streamlined manufacturing and in software, and this over-the-air software that drops literally as much as $200, $300, $400, $500 of pure profit to every car sold annually. That gives Tesla a big edge. So that's why Tesla and the Chinese are showing up on top. There's no mystery here. The American automakers are going to have to figure out how to fix for that.
So Tesla today is at 238. Where do you think that's headed? And BYD, is that a stock you would buy?
So I think you have to look at BYD, fastest growing auto company in the world, extremely profitable. They're going to challenge Tesla in Q1 and maybe even in Q4 for who's selling the most units. Tesla's going to be at roughly 1.8 million. BYD is going to be right there with them. And I will tell you right now, BYD is going to be a little more profitable. But Tesla's ready to strike back at BYD, bringing a $25,000 car to market in the next 24-ish months. That's going to be powerful for Tesla. And then BYD is going to have to deal with the issue that there are IoT devices in every Chinese car they sell. A lot of people are not going to be as comfortable with that. So a lot of intervening factors. It's going to be a fascinating one to watch on Vine, but there is a new big three in town, and investors need to get their heads around that.
Tesla is one of the most amazing and innovative companies in the world, but its stock is also pretty volatile. Investing in Tesla is not a smooth ride, and that is why you need to be careful and smart when you invest in this company. As an investor, you need to know what not to do and what to do instead. Today, we're going to show you some of the common mistakes that many Tesla investors make and how you can avoid them. Whether or not you're a beginner or an expert, a fan or a skeptic, a bull or a bear, this video is going to help you make better, more informed decisions about Tesla investing. So, without any further ado, let's get on with the video.
I think the backdrop is important here, both the market and for Tesla. So the Magnificent Seven have had an incredible year, as everyone knows. And I think there will be scrutiny on these names as we begin next year and people level set and say, where do we go from here? And we think Tesla's earnings are going to be flat next year. We think they're going to have to lower expectations around deliveries for next year. And the stock is trading at nearly 100 times our estimate for next year's earnings. And so if collectively the Magnificent Seven are going to, potentially pull back and investors are going to think about these stocks more critically, certainly Tesla is one of those companies where I do think that we could have underperformance. And as you mentioned, Tesla did very well this year. The stock almost doubled, despite the fact that earnings were essentially cut in half. Analysts thought they do about $6 in earnings a year ago. They're going to end up doing under $3. And the stock was remarkably resilient because people believe, that growth is still intact. And I think 24 and 25 are going to be pretty tough years for Tesla. And so you do run the risk of losing this growth narrative. And it's really hard to sustain a multiple like that if people are doubting your growth. So that's essentially the case.
But let's just talk about the growth piece of it, because I understand the margin compression piece of it, but I'm curious sort of what you think about the growth piece of it and the idea, if you believe, and look, it's been a long time, you need the breakthrough to happen. If you believe the sort of self-driving car narrative, if you believe some of the tech narrative, does that change any of these dynamics?
Clearly, if Tesla was able to deliver and regulators were able to accept full self-driving, a year from now, that adds potentially $10,000 plus in profit per car, and that dramatically changes the economics. I think our belief is that it's difficult to know when full self-driving will kick in, but we think it's years and likely multiple years, not only from a technology perspective, but perhaps more importantly, from a regulatory perspective. And then, I think more importantly, we think that over time, full self-driving will become democratized, that there are lots of really big companies investing lots of money in full self-driving. And so Tesla may very well get there first and may be able to command higher prices for a few years. But ultimately, like everything in the auto industry, competition drives down pricing. So that $10,000 per car, if Tesla's able to capture that 3-5 years from now, that could be $1,000 or $2,000 per car 5 years after that.
Right.
Tesla is one of the most popular and innovative companies in the world, and many investors are fascinated by them. They've got the potential to revolutionize the automotive industry and beyond, and many even dream of retiring on the stock. However, investing in Tesla is not that easy. There are many pitfalls and challenges that you've got to be prepared for, or else you could lose your hard-earned money. And it's very important to learn these mistakes and avoid them if you want to be a long-term Tesla investor. Hey guys, welcome back to Tesla Tomorrow. Tesla is one of the most exciting and innovative companies in the world. But investing in it is not as simple as it may seem. So here are 8 mistakes you've got to avoid if you want to retire on Tesla stock. Number 1. Don't invest more than you can afford to lose. Tesla is a volatile stock, and it can experience huge swings in price due to various factors like market sentiment, news events, earnings reports, competition, regulation, and innovation. While some investors may see this as an opportunity to buy low and sell high, others may panic and sell at the worst possible time, missing out on future gains or locking in losses. If you invest more than you can afford to lose, eventually, well, you're going to be looking at your retirement savings that are meant for long-term growth and stability, but instead you could end up losing everything and jeopardizing your financial security. Before we carry on though, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. Number 2, don't invest without doing your research. Tesla is not just a car company, but it's a tech company operating in multiple sectors. Battery production, solar energy, autonomous driving, software development, and space exploration are all key areas. To understand how Tesla makes money and what its future prospects are, you've got to do your homework and learn about its business model, financial performance, competitive advantages, risks, opportunities, and challenges. And you've got to keep up with the latest news and all the developments about Tesla and its industry peers. Investing without doing research could lead to making uninformed decisions based on hype or rumors rather than facts and logic. Number 3, don't invest without diversifying your portfolio. Tesla is not the only stock that matters for retirement. There's other factors too that have long-term returns and risks. For example, inflation could erode the purchasing power of your money over time. Taxes reduce your net income from dividends or capital gains, fees eating into your profits, market crashes wiping out your gains, and geopolitical events disrupting trade and supply chains. And so, to protect yourself from these financial threats and maximize your chances of success, you need to diversify your portfolio across every asset. Number 4, don't invest without having a clear goal and plan. Investing in Tesla is not just about buying shares. It's also about having a clear vision of what you want to achieve and how you're going to get there. You've got to have a specific goal for when you want to retire on Tesla stock. For instance, decide on when you want to retire, how much you need, and how much risk you're willing to take, how much return you're expecting, and how long you plan to hold on to things like that. This should also be based on realistic assumptions about inflation, interest rate, dividend yield, capital appreciation, and others. You also need to have a plan on how to execute that strategy, and then monitor your success, adjust tactics, and do all of that based on changing market circumstances and conditions. If you watched this far in the video, well done. Don't forget to leave a like, subscribe, and ring that notification bell. Let's finish up. Number 5. Don't invest without having a clear exit plan. Investing in Tesla is not a one-time deal. It's a long-term commitment requiring a plan for how you're going to buy and sell shares. You need to have a specific reason for exiting your position, a target price or percentage of return, and a time frame too. Having a clear exit strategy will help you avoid emotional decisions based on fear or greed and ensure that you lock in profits or maximize your losses at the right time. Number 6. Don't invest without being aware of the challenges and risks. Investing in Tesla is not risk-free. It comes with many uncertainties and difficulties that could affect its performance and valuation. Some of the risks and challenges Tesla face include competition from other automakers and tech companies, regulatory hurdles and legal disputes, production delays and quality issues, supply chain disruptions and shortages, and social backlash, to name a few. To reduce these risks and challenges, do your homework and learn a company's strengths, weaknesses, opportunities, threats, competitors, customers, suppliers, partners, and regulators. You need to monitor the market trends and dynamics, consumer preferences, and technological innovation because all that affects Tesla's business. Number 7. Don't invest without being flexible and adaptable. Investing in Tesla is not static, it's dynamic and evolving. The car company is constantly changing its products, services, strategies, goals, vision, and culture to meet the needs of its customers and stakeholders. This means that what worked for Tesla in the past might not work in the future. What was once successful for Tesla in one market may not work in another. And what was popular for Tesla amongst its fans may not work with its critics. To keep up with these changes and adapting to them accordingly is a very important skill to have, and you need to be flexible with your investment. And now the last one. Number 8. Don't invest without being patient and disciplined. Of course, investing in Tesla is not a get-rich-quick scheme. It's a long-term journey requiring patience, so you need to give it time and wait. What other investor mistakes do you think should be on this list? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you want to learn more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.